My name is Greg Bittar, Managing Director of Lotus Resources. We've just restarted uranium production from the Kayelekera mine in Malawi. We also have a second, longer life, larger scale project in Botswana, Letlhakane.
Great, good to see you, sir. Both here.
Matt, good to be with you.
On foreign shores.
Both on foreign shores.
And congratulations, the newest producer of uranium.
Yeah, terrific.
Not talking about it, doing it.
No, doing it, and very conscious that we need to deliver.
Yeah, okay. So look, we were at WMA last week. I think it was a kind of great reception. I think the big message that comes out of that is this is no longer a demand story. This is a supply story. So you coming online is perfect timing, right?
Yeah, and any demand and any volatility is going to be more likely to be driven by the supply side, with demand very well accepted and quite clearly mapped out. So perfect timing for us. We did guide to third quarter calendar 2025 for first production. We now embarked on ramping up production, and we expect to see steady state production through the first quarter of calendar 26. So for us that means 200,000 pounds per month for an annualised steady state level of 2.4 million pounds per annum.
Right, which is quite sizable. Certainly when you can compare it to the North American market production profiles that we're looking at there, it's sizable. But where's that going to feed into? So
we'll feed into our current offtakes, which are principally North American utilities, right. But we remain 65% uncontracted. We will look to introduce contracts that are market linked, so market linked pricing, referenced off the market price, but not into the spot market.
Okay.
So these will be market linked contracts, ideally with the same group of North American utilities and an expanded group. We've got a whole range of discussions in North America and across the world with utilities, so very confident that we will layer in more contracts, but market linked, no longer fixed price contracts.
Okay.
They were our original construction.
Right, well prices are very, very topical in this sector of ours, uranium. Most were expecting much higher prices much sooner. Not quite there yet, sitting in the low 70s at the moment. So when you talk about things like getting to production, hedged, spot market exposure, how do you deal with things like inventory control? Do you need to kind of sell in everything you've got for the first couple of years and then worry about inventory, take advantage of growing price?
Look, it all comes down to balance sheet. And we did a capital raise last week, and that was designed to really give us runway, an extended runway to build up working capital. I want to invest in our pounds at our cost of production.
Yeah.
I do see the longer term outlook. Everybody talks about the longer term outlook being stronger, and so the more patient we can be, within reason, to capture that medium to long term upside in the forecast uranium price, will put us in good stead. So once we're a producer, now a whole range of different options become available to us. Once we have cargoes at converters, again, greater flexibility around being able to be patient around that inventory build-up.
Okay, well let's break that down a little bit and simplify a little bit. So we want to talk about, for people new and maybe some of the younger boys and girls, what you're talking about there is you've got a strong belief in that the price of uranium is going to move significantly. There'll be a step change, and that's cheaper than the cost of capital that you've just gone through raising. Yeah.
Yes. Yep.
Right. Where's that come from? Why are you thinking?
So we need to ensure that we're funded from a working capital perspective. This is a unique industry. The long lead time to ultimate payment and cash flow, and we see free cash flow through the second quarter of 2026. So we're not far away from free cash flow. But in terms of the outlook, we do see the undercurrent bringing in the utilities having to rebuild inventories, having to fill or to replace the pounds they use in terms of their future contracts. We see a lot of interest out of China. We see a lot of interest from various parts of the world on the demand side, which gives us very good confidence, or very high confidence, that the trajectory is very positive. Okay. We are seeing this, the spot price has moved into the mid to high 70s. I think talking to the UXC and Trade Tech and other people last week at WNA, I think it's only a matter of time, or it feels like only a matter of time, before we see a significant move in the long-term price as well.
Right, but you've also got to protect yourself. So we've had those conversations many times over the last 6 years. And it has bumped up and down, but you know, here we are. So you could be careful yourselves in terms of that hedging or hedged exposure.
And we have the 35% of our production from 26 to 29 under these fixed price contracts.
Yeah.
And that gives us a very high level of C1 coverage, our C1 cost coverage across our production. So good margins. You know, we talked to the ASX about the pricing of those contracts, and we believe they give us good margin, referenced off the long-term price. And then we can be patient. We won't be too patient. We will be selling more pounds in 2026, but I think we can be patient around the contracting parameters.
Okay, so remain in control. So this is the Kayelekera. It's a reboot, restart, however you want to frame it. Modest capex, would say that. So you've given you some degree of control in that sense, because you haven't had to dilate the company down so much. But look at when you're sort of planning that build out, were you deferring any kind of capital expenditures, you know, to later dates so you could like pay for that out of cash flows? Not to pay for it out of cash flows, more just to not delay the restart. Right. Okay.
So there was a $50 million US capital spend to get us to a position where we could turn on the mill.
Right.
There's another 40 million or so of deferred capital that we still embarked upon. Now, a big chunk of that was is the power grid connection, and we've started spending on that grid connection. So permits are in place, way leave or land access is available, all of the contracts are locked in, and we've started spending a significant portion of that 20 odd million US for the power grid connection, because we want that on as quickly as possible. So we will commission that power line on the current expectation by the end of 2026. That gives a material step change, a material reduction in our cost of production. We think $5 to $6 a pound once we go from the on-site diesel, which have been refurbished and are running well, to a power grid based solution. The other part of the capital spend in terms of the restart capital was rebuilding the acid plant. So we've started on imported sulfuric acid. We will have that acid plant commissioned and performing or producing acid in early 2026 calendar year. Not as significant in terms of cost step down as the grid connection, but still very significant. So deferred capital, but only deferred, our way of describing it, wasn't critical to restart, but very important to optimising the operation. Right.
So, okay. So let's get into revenue sooner, and we'll smooth things out later on. Okay, that makes sense. Where's the acid coming in from?
So the acid's coming in from, we've got our acid supplier out of South Africa.
Okay.
But it comes in from several jurisdictions in that part of Africa.
Right.
We will import sulphur from the Middle East once we have the acid plant commissioned.
Gotcha. Okay, fine. Now, let's kind of look at the macro a little bit. Okay, what we've seen last year or so is some of the companies that aren't, very few companies which are in production, have stuttered and stumbled a little bit. So, won't name them, everyone knows who they are. What are you doing in terms of risk mitigation and kind of ensuring that kind of continued smooth sailing?
I think, Matt, you take out ISR.
Yep.
So distinguish us from ISR, whether it be ISR in the US or ISR in Australia. Very different. We are hard rock, small open pit mining operation. This plant performed before. So in production through to 2014, we spent a lot of time reviewing the records, but also with a number of people that we brought back in from the previous operations, understanding the issues and understanding as part of the restart how we mitigate or change what we're doing, whether it be at the front end, whether it be at the back end with the calcine product, the calciner that we've installed to produce the calcine product, very different to what was produced before. We've also built it into the schedule. So I'm talking first quarter calendar 26 for ramped up steady state. We have a reasonable buffer in there because as a restart, things go wrong. And the team, we've had to ensure that we were on top of the weather situation, on top of critical spares. We moved quickly to understand who the consultants were, whether it be the mill consultants, the power station consultants, specialists around the acid plant, the calciner and scrub, the drying and packaging specialist. So we really moved early on to identify where the key risks were. How do we factor that into our plans and have a contingency, and then a contingency for the contingency? And then I've built myself flex on the schedule and the budget.
Right, lots of contingency.
I think that's the only way we can do it.
I think so. Well, also because there's not a lot of examples that you can sort of look to and go, you know, what was their ramp up like? Because it's been a long time since anyone near Hard Rock or otherwise has come online. So, I mean, remind me again of your team's experience and
So we've and the team looks very different today to what it was even 6 months ago.
Yes, of course.
Certainly very different to what it was through last year. But we ticked the technical boxes: mining restarts, refurbishments, led by Warren King, our project redevelopment director or project restart director. Our general manager, Sarah Mansouri, she has terrific African experience, recently through the DRC and Angola, mining engineering and geological background.
Yeah.
Philip Schumann. We've pulled in all of the expertise. So we got the mining experience, the processing experience. We continue to add to our metallurgical team. We continue to add to our processing team, particularly in the maintenance area. We've also, the non-core maintenance or the non-processing maintenance side of the business has been quite important. So vehicles, equipment. We have now a lot of equipment on site for road maintenance, for the TSF work we're doing, and also, you know, in expectation of us starting our own mining, owner-operated mining, which we will start very soon.
And how's the government on this? Malawi?
Terrifically supportive.
Pleased, right?
We had the president on site not long ago for the official reopening.
Did you get to cut a ribbon?
There was a ribbon cutting.
Excellent.
So we've got videos of that.
I was talking to someone about that this morning. Apparently Chileans don't do that.
Oh, don't they?
No.
Wine bottle?
No, not even.
No, not even. But also we had the whole community, all of the traditional owners, the paramount chief, and all of the tribal leaders and village chiefs and village leaders. We have 550 people on site at the moment. Over 91 or 92% of those are Malawian. Right. That will grow. We recalibrate. Some of the restart personnel will leave, and others will come in for the mining build-up. We expect about 600 as a normalised workforce, and I think close to 94, 95% will be Malawi. And we do need to rely on expat skills, at least initially, and then hopefully training, development, diversity and inclusion. You know, it's all part of what we're talking to the government about and what we're demonstrating to the community that we're focused on. So no, terrific support.
Well, yeah, well, it was just
we're
good
in the schools where we support teachers. We're rebuilding teacher housing. We're just doing stuff that is easy for us to do, but is quite impactful. Supporting the local clinics, our on-site medical team support local, situations as we can.
It's good to hear and good to see,
and
quite frankly.
Yeah, Malawi, this is important to Malawi's national income, economic growth, and for other mining companies looking to develop and operate within the Malawi mining sector.
You made a good point earlier, actually. The difference between a build team and an ops team. There's subtle differences there. Subtle
and not so subtle.
Yeah.
So the whole commissioning, the transition plan, the labour, the way we approach the restart with the contractors allowed us to bring transition over people from the restart teams to the expertise, particularly on the maintenance side and engineering side. Yeah. So we wrote that into the contract with our labour sourcing group early on, that we had the flexibility to build our team from their team as well. So that's been helpful.
Well, I'm willing and able, I'm sure.
And also the network of the new team and the people that we've brought in has been very powerful. We've also we've added to the corporate team with a new CFO, and Hayden Bartrop, my colleague in Perth, is very focused on the commercial side and particularly the marketing and offtake side.
Yeah. Now, I think that's especially should be commended because Malawi it's not exactly a big mining country.
No, this was the only commercial operation, and this will now be the only commercial operation for some time. A lot of artisanal.
Poster boy.
But
that's what I'm saying. You should be commended for that, because it's not as if there's a big pool to draw on of trained staff. You've had to kind of build that yourself.
Yeah,
great.
and that's brought its challenges, but also
Sure.
the opportunity. And Malawi, being where the location is and its geographic separation, it adds a time and a logistics aspect to it. And we understand now how to factor that in and how to operate.
Okay, well, look forward to seeing how things go there. As you say, as you ramp up to that sort of 2.4 million a year. The trouble with this is, Greg, the market's going to say to you, great, what next? So Letlhakane. Let's talk about that.
And we've been consciously quiet on Letlhakane. We've been doing some study work in the background to optimise the mining operation, but importantly, some significant metallurgical test work being done in Australia by ANSTO, column leach test work, looking to simplify the flow sheet and reduce the cost of processing, particularly the acid consumption. We're seeing some interesting green shoots. Won't get too excited at the moment, but I do expect that over the coming months, certainly early in the fourth quarter or during the first half of the fourth quarter, I think maybe October, we'll talk to the market about those results. Some additional exploration to continue to upgrade the resource, because it's a terrific resource, 115 million pounds at the moment, inferred and indicated, 365 ppm. We'll do some more drilling and we'll get ourselves on a pathway to PFS and have that PFS delivered later next year is my expectation, but we need to firm up those plans and announce that in the coming month or two to the market. Right. There's terrific strategic value in that project. Longer life, larger scale, we own 100% of it. Botswana is a mining jurisdiction, mining licence granted. It will overlap with Kayelekera, so Kayelekera will be the funding vehicle for all of that spend, plus give us surplus capital, all things going well for growth or capital management. So very synergistic project.
But what I'm interested in when companies have this sort of multi-jurisdictional, which I think is always a good idea, and therefore multi-asset portfolio, which is always a good idea as well, where one project may fund another. In this case, as you said, it's a much bigger project, longer life, and all of those sort of good things. Getting that balance between giving something back to shareholders and funding this at a proper rate, because you can move it at any pace you choose. And so again, and having one eye on the market more broadly. So I say, reading this market has been very tough for the past few years. I think a lot of very wise men, wiser than me, have called it very wrong in terms of how this plays out. So how are you and the team looking at Letlhakane?
Well, I think it's important that we progress it, because if the outlook is as buoyant or any bullishness in the outlook means that there is that latent value in that project for us, and the strategic appeal that creates for the company overall is very valuable. So we do need to progress it, and we want to progress it. I think we just be very conservative. I think the balance sheet approach with Kayelekera, predominantly equity, giving us balance sheet flexibility. We will repay the loans that we've invested into the funding for Kayelekera in the first instance, and the development spend through to a final investment decision on Letlhakane is not substantial. It's very manageable. The PFS, it'll probably be in the order of 5 to 6 million Australian dollars over 10 months, including drilling and study work, and then step that up a little bit. Step that up for moving down the DFS pathway with all of the test work. So for a couple of years of study work and development work and pushing towards that FID point, it's very manageable.
And let's do some comparisons, not by name but by region. Okay, so obviously, the Athabasca boys and girls will say, look, we've got super high grade. It's all good. Therefore, we're the best show in town. And there's no doubting the grade. It's phenomenal stuff. But very few large finds so far, large discoveries. Africa has a whole different set of qualities about it in terms of permitting timeline and capex and opex, sustaining capital opex, and all of that sort of good stuff. So both sides have got good things going for them, but slightly different timelines, I suspect, as well. So again, feeding into this market supply issue, do you think the African projects have a bit of an advantage there?
I think the African projects will have an advantage, just the nature of the deposits, the timelines to approvals and production.
Yeah.
But look, we see Letlhakane as really a little bit early, so playing catch up with some of the other projects in Africa and Namibia that are going to come online or there'll be FID decisions around in the not too distant future. We see it from a size perspective, we see it from a grade perspective, we see it from a metallurgical perspective. It can be positioned quite well in amongst our African comparables. So that's what we're looking to achieve, and play catch up on the development and get into a position where, as we continue to see the shortfall through at the back end of this decade and early 2030, Letlhakane is a real story.
Right, and it seems like you kind of made your bet into North American supply already. You think that's most likely to continue? We've seen some projects in Africa and perhaps having to look a little bit east in terms of funding, access.
Yes, it's still 65% uncontracted.
Yeah, so you've got options.
And 100% uncontracted from 2030.
Okay.
So we're only 2026 to 2029, 35% contracted. We've got a whole range of discussions that cover all geographies. The more earnest ones and the more enthusiastic ones are from outside of the US at the moment.
Is that right?
But so
you've got that competitive tension going on.
The market will deliver the outcomes for us, so we won't be necessarily playing one off against the other in a traditional competitive sense. But it's important to diversify the relationships, and I'm pretty confident that we'll see contracts and interest from parties outside of North America.
Fantastic. Well, I know you've got to jump on a plane and head back. You've been on the road a while, and I'll also let you go, but I'd love to kind of catch up with you again.
Pleasure. Nice to meet you in person.
Progress.
We'll definitely stay in touch.
Yeah.
Thank you very
much.
Thank you.